Hey everybody, welcome back. Well, a lot to go over in a short time to do it, so we're going to hop right into it. We have a doji. For those that have been watching, you know that you have retail sales tomorrow. We know that retail sales are really important. Now, for time's sake, I'm not going to get into why they're so important. We went over it Saturday. I will link Saturday's video at the end, and they are timestamps in that video, so you can go right to that specific sector, but I'll link it at the end. What is most important here? A couple things. Number one, you're seeing Empire State drop. So we're seeing manufacturing drop, but that's in consensus. So that's not that big a deal. But take a look at the 3-month and the 6-month and look at what's going on here. Now we need to talk about a couple things. What's going on with the bond market and why the dollar is rising? Why is the bond market dropping and why is the dollar doing its own thing? We do need to discuss that very briefly. We're going to go broad on that, not deep, but you need to have an understanding, especially for tomorrow because of the sectors that are moving because of that. Powell spoke. Itchy didn't really say a lot different than he usually says. Things are good. We're fighting inflation. Yay. That was really it. Really had very little effect on the market. They are in no hurry to really do anything right now. But if we focus here tomorrow, we need to watch retail sales. Retail sales can affect the market just as strongly as CPI tomorrow. This is a big deal, guys, and you're already seeing a lot of signs of this. Now, that said, the next thing that you're going to want to watch after retail sales at 10 o'clock is this NAHB Housing Market Index. Usually, this is a non-event. Same with inventories. You kind of want to watch that, but this is usually a non-event. If this sells down, realize this is back-looking and lagging data. It's going to present an opportunity to look at the home builders, and then, of course, you have the 42-day T-bill auction, which you're probably going to want to watch as well. It's a weird 42 days. Kind of weird, right? But it is what it is. I'm sure there's a reason why it's 42 days. Candidly, in 25 years of trading, I still don't know why it's 42 days, but probably knew at one time. But this is going to be something you're going to want to pay attention to, because if that gives us an opportunity, we could look at nail, we could look at some of these home builders that have been on a tear. But most important is retail sales, and you're already getting signs of what institutions think of this. So if we looked at XLY today, we can see that we're forming what I refer to as the horrid devil horns. You kind of have the horn here, the horn there, and then you kind of have the little face in here. If you do it on an hourly, you can kind of see this stuff a little clearer there. It's not ideal. It's not ideal to get to the same level, reject, and have the same kind of trajectory on the rejection. So I'm not really crazy about that. And we just saw carnage out there today. I'm going to go through a couple of them really quickly there. I apologize for talking fast. And it's been a long day, obviously, of trading. It felt like a war today, really. It's a really good trading day, but it just felt like I was struggling all day. Things took a lot longer, and I think that's worth pointing out, too. You know, the way that we were able to move in the past off the first half hour for our day trades, has anyone noticed that those are taking longer to develop during the day? You have a triple top here in ELF. Some of these other names that look like they were going to go, yeah, they're not going to go. And you can already see the rejections. They're already setting up to reject. So whenever I see this, they're kind of telegraphing what's happening here, right? They're getting out of these ahead of it. And you can see this with Lulu, that's just been a dumpster fire, right? I mean, it's literally a dumpster fire floating down the river, and that's actually worse than just a dumpster fire. And then you have Morgan that basically just threw Nike to the wolves today and said, just get out, complete Amityville Horror, time to go. So I thought that was kind of interesting too, the timing, but that was ahead of retail sales. They don't do anything by accident. That's not like an oops. You need to get out of retail. So, and one of the reasons for this, we touched base on it, and I'll say this much without having to watch the Saturday video. You had CPI that was down, but PPI was up. That is corporate profits at a T. This is what they pay. This is what we pay. In other words, when they make our burrito, it's PPI, and when we buy the burrito, it's CPI. And we're seeing that. So this is really very important stuff tomorrow with the retail sales. Now, there's a couple topics here we're going to have to talk about intelligently without getting into politics, but let's do some of this. The VP pick was somebody that was instrumental with getting pot approved in Ohio, and apparently that made these names go up pretty precipitously when this was announced, and you can see how it's hanging in there. I believe the VP gets to give his speech. If he wants to be like the younger, cool, hip Republican, if there is such a thing, then maybe he's going to try and claim that we're going to do this federally since he helped in Ohio. The other thing, this flip side of this, is the Democrats might want to become the cool kids again, and they might bring it up. And so therefore, I think on the election, this is going to be a hotbed of, no, we're the cool kids and we're going to do it. One of those kinds of things. I think this is going to put this in the spotlight. And I would look at some of those names. The other thing, When you're looking at OIH and what's going on there, look, there's a couple things that I really need to go over here. I need to go over them because they're pertinent and they're going to affect and they're going to shift based upon election results. So I've been very clear about this. I don't really care for the political chit chat. What I care about is what's going to make us money. Drill, baby, drill. So if he gets elected, you're going to start seeing all these exploration stocks start to move. You started to see it today. So start looking at the exploration stocks. You're going to see that. Also, there is a lot, if he comes out with tariffs, that could be why Bitcoin's moving as a hedge against possible inflation and yields going higher. I'm going to explain that in a moment. But if you look here, you have the pot names, you have the oil exploration names, and you have block, which is the Bitcoin names really breaking out. On top of that, you look here, you have energy, drill, baby, drill, and we have the home builders. So what are we not seeing here? You're seeing biotech, you're seeing REITs, okay, and then you get into gold. Now, gold's moving, in my opinion, for another reason, but this, to me, there's a couple things that were a little troubling. Let me show you this. Again, this is just 40 sectors that I use, and I did make this available, or thought I did make this available on my page on TradingView so anybody can grab it. It's Arete 20706. If I did not, please comment below and I'll make sure that I make it available. And someone can always tell me how to make it available if I did not, so we could expedite the process. So this is my concern, and it's a valid concern. When I see non-correlation, I get nervous. Now let me explain what I mean by non-correlation. If we're worried about the market and the market's frothy, we buy the defensive names. The defensive names closed at the low of the day, which means CL. These names, low a day. Procter & Gamble, low a day. Clorox, say it with me, low a day. So where's my flight to safety? And then you come here and you're going, they're buying gold. Well, why are they buying gold? All right, there's a couple things that we should talk about here. If you have a change of administration and you have a new administration comes in, that administration is going to be considered very good for certain names. It is very good for the industrial space. So if the incumbent comes out of office and we get the new administration, the front runner right now, and he comes in, then you're going to see the industrials go higher. That means IR is going to continue to do what you see it doing. That's not it. IR, there we go. So work with me. So names like IR are going to push. Caterpillar is going to push. Deere is going to push. Why? Because all of a sudden, not only deregulation, but the tariffs and the tax cuts that go across the board are going to spur this. Again, I really don't care for your political rhetoric on the matter. All we care about is what can we do to manufacture profits for ourselves. And this is more swing trading kind of thinking. But also anything that we export, they're going to get hammered. So somebody that makes like a Tesla that sells the majority of their product in China, they have a real problem on their hands with the incumbent coming out and the new guy coming in. So take that for whatever it's worth, but it's an issue from that standpoint with him dealing with tariffs. It's going to be a problem. So this is something that people are going to have to start realizing that that's why we're seeing. Also, the tax cuts, deregulation, it's steepening for yields. So that's when people are looking at this and going, I don't understand, why are they selling bonds? Because if we do this, it steepens rates. And as you steepen rates, the other thing you're going to see is you're going to see the dollar go higher. So even if you get certain data that could weigh on us, when you start changing and playing with fiscal and monetary policy, it's going to affect the dollar, right? And so what are hedge funds doing, institutions doing? They're always trying to get ahead of the game, right? That's the game. So this is why they're moving. This is why you're seeing XLI act the way it is. That makes sense to me. What doesn't make sense is when we see that we're clearly overbought and they're selling XLP. Those non-correlation moves, they do concern me. Now, we had a ton of good news, but there's still this kind of albatross around their neck. Take a look at this. Now, in front of us is just a clip from an investment bank on what they see at their trading desk, and here's what they're saying. And they're talking about their corporate trading desk. Another light week on the desk as we continue to move through the corporate blackout window. We'll get to this in a moment. Volumes finished the week at 0.9 versus 223 year to date at the same time. 0.6 of 2022. Skewed, tech consumer discretionary. We now estimate blackout will run to 726 and open the window in 729. Remember, there are three kinds of buyers. There are corporate buyers, institutions, and retail. If we lose one of them, we don't have all the demand that we usually have. 50% of the S&P are out of the blackout by then. And then you should see more buying step in, and that usually stabilizes us a little bit. On the authorization front, 2024 year-to-date still stand at 714, up 10% from 223. This is where it gets kind of interesting. Okay, so the corporate desk trading flow. What does all this mean? I think it's pretty interesting to look at what they're saying. What Goldman's saying here is that, okay, this is where they're at on the week, 0.8, okay, versus 2024 year-to-date. Versus 2023 year-to-date, they're at 0.9. They're at 0.6 versus 2022 year-to-date. Versus 2021 year-to-date, they're up a lot because no one was buying stocks in 21 except two people that were buying NFTs and thought they were really, really, really smart. So then you have the people here that are saying, we have no volume, we have no volume. And then you look month to date, we have no volume, no volume, no volume. How about the 23? You're about in line with 23, about 22. We are nowhere near. So all this is putting pressure on us. You'll remember we've been following for some time. I showed this about a month ago and said, hey, this is starting. And then we're going to get to a point where it's going to become a real issue. And this is where it becomes the issue. And this is really where you're at. You're in the heart of it now. So what we're trying to do is we're trying to get to the other side, right? So we need to get here and get to the other side of this. But keep this in mind. When you're seeing stocks rally, you're being like, well, they're not trying to buy my stock. It doesn't matter the stock. It matters the supply to the marketplace. Now, what we are seeing is we're seeing a battle of two tapes. This is the NQ. And what I think would be most prudent is, before we go take a look at anything else, is to just drop a couple other things in here and just look at RTY. And then also let's just take a look at the ES. And I think there's a couple things here we have to go over, but let's do with the basics. And obviously the basics are just going to be looking at all three of these and saying, okay, what are we dealing with here? So we'll clean off the drawings and we'll just go and take a look at us from, let's just take 930 on. And you should be able to see really a tale of two tapes. So as we hit highs and then pull back, we then get more buying where we get less buying here. As this hits a low, this hits a new low, the ES and the NASDAQ. And what happens here? That buying finds buyers. Even to the point that if you were just going to take the fib levels to just kind of take a sense of it, let's do the top. If you took the fib levels here and you just dropped them on RTY, well, you're getting a very different view, aren't you? You're in the 78.6 percentile of the move of the day. 61.8 actually held, right? So that's very different to get than what you're getting anywhere else. If you were to do this with, let's just take, what's this one? This is the NASDAQ, and then we'll take that's not what we wanted. And then we'll take the NASDAQ and we'll do the fib levels on it. Actually, I have that on the toolbar. I don't know why I'm doing it this way, but let's get to the low and see. And so then you could see that you stopped at that 38.2. It's almost an inverse of what you did with RTY. Really important to get that, guys. It's not stopping. It's actually increasing. It's actually getting stronger. Matter of fact, even on Friday, they did that little head fake where they made people believe that, oh no, we're just going to fade, and they just reversed today. And it's the usual suspects that we've been talking about, where you're seeing the regional banks, and they're finally breaking out of that multi-year base that they've been having for some time. And we've been talking about this, like, oh, when are they going to finally break out? They're going to finally break out when no one's paying attention to them and forgot what happened 18 months ago. And you're not even back to the low of that yet. So a lot of room to the upside here on the regional banks. Some of those names look just absolutely exceptional. If you were on the pre-market live call today, we talked about a couple other names, and one of the ones that's the public call. Anybody can attend that. We talked about this in great detail, and you can see how it's starting to move. Anything interest rate sensitive like this is going to get a lot of attention because they benefit greatly as rates drop, and rates are going to continue to drop. But as rates drop, they make money. If you are borrowing, let's say, you're borrowing it, let's say this is 5% up here, right? And then they're only paying 1% here. They make that difference. If they were borrowing at 2.5%, well, then they're going to make that difference on their gross margins, and the earnings go up based upon that. Pretty easy to follow along, right, onto why cutting interest rates is so important to companies like UPST. And I don't think that that's really going to change. I really don't. I don't think that we're going to see a big change with that. I think the two biggest shockers today were going to be what we saw with Bitcoin and what happened there. Number one, this is where everyone said it was going to break. Remember, guys, as far as order flow now that this is an ETF, it's all in the hands of BlackRock. And Fidelity and whoever else opened up one of these. They can just say we got inflows, we got outflows. It doesn't matter anymore. They're allowed to put money into their own ETF, so they can whack these things around any way they want. Increase the buying, decrease the buying. trigger stops, rally. We're going to talk about triggering stops today on one trade because I see a lot of people happening to. I'll get into it in a moment. So if you see this kind of stuff, the game's changed drastically. They're just whacking you down and then you're going from there. You can there's exhaustive measures that you can use to measure this stuff out. One of the things that I'll tend to use that anybody could use, I'll use DeMark as well. But this kind of stuff, when you see like these kinds of divergences, people say divergences don't work and I'll go, okay, but there it is again working. And they'll say, well, it doesn't work with RSI. And I'll go, okay, well, there it is with RSI too. So these things sometimes become pretty glaring, guys, if you just would give yourself the time to actually learn this skill set. But when you see this kind of thing, you start seeing it break, there's really very little reason that this can't go right all the way back there. And what I thought was fascinating, I was looking for any anomalies out of it today. And the one thing that stood out to me was, this broke out. Like this really broke out. And this is kind of interesting. This is why I wanted to talk about it. So here's BLOK, which is the ETF, right? And this has all the miners in it, et cetera, et cetera. And you can see back here, it got goofy. Everyone was going to make a ton of money. NFTs forever, right? Boomers don't get it. Whatever, dude. So you can see how we're breaking out right here and how we're going. Remember, who was it? Jack Dorsey sold a tweet for like $1 million. Some moron bought that. Anyway, you can see how we're breaking out and pushing right here, right? Look at that key level that you're sitting on. You get through that, there's a lot of room to push here. And I do make fun of the NFT guys. I usually don't make fun of people that do investings, but the NFTs, when you were buying JPEGs, you guys kind of deserve it. So if you can see that, you got a clear shot there. Now, the way that this is pushing versus this, so in other words, what I do a lot of is just the relative view. I like looking at things on a relative basis. And yeah, I still have to deal with the fact that it's going to be manipulated. But if I go out there and I look at this on, let's say, a 5-minute chart, and I drop this to a line, and let's go back and take a look at this for a second. What do you notice here that's starting to happen, right? And I think that this is really kind of fascinating. Look how this is pulling away. Okay? And it's been pulling away since the 10th. Now, people could say there's a lot of reasons for that. I don't care what the reasons are. This is what it's doing. So we have to pay attention to what it's doing and then figure out how to profit from that. So a lot of people will say, well, that's just MSTR. I don't care what it is, right? It is what it is. Now, does MSTR keep going? Look, guys, your guess is as good as mine. The only thing I would say to you is it's getting tighter and tighter. There really is no other hedge for Bitcoin the way that these guys are using it. There's your DTL. I've been watching that all day, and candidly, it kind of failed. This kind of goes back to here. Some people will say, no, it doesn't. All right, so let's draw this one. I kind of feel like it does. I kind of feel like it starts from that jump-off period back here, but either way, this is getting tighter and tighter in here, guys, so you're going to make a decision. Now, this is where it gets funky, because if you use a 55 and you looked at this, I don't know why that didn't pop right in. Should have. Yeah, right there. Oh, that's odd. So if you use a 55 and you overlaid this, you would see that the 55 is right there and how that's acting, right? And of course, that's definitely something that you'd want to pay attention to. But for me, most important in looking at this is, there's no way you were going to look at this on Friday and say that technically this was going to happen. And this is the kind of stuff that you're going to see over and over again. You couldn't get above the 55, the 22, but miraculously, you're going to step in front of this train and say, oh no, we're fine, even though it couldn't get above it. I mean, you're just speculating. It's really hard to do that. Today you jump into it and maybe you caught this, maybe you didn't. If you did, congrats. The other one that's trading really, really well with it, in my opinion, it makes a lot more sense as Coin, the way you broke out and you're above the 12, the 22, and the 55 all in one shot. Gives you a really interesting level. But then you look at names like Mara. These names are breaking out. Like that's breaking out. And you come here and look, all I can tell you is what's happening. I can't tell you if I agree with it or I disagree with it, but you've been basing for months. And here's day one. It is what it is. If you go and take a look at Riot, yeah, it's similar. CLSK, yeah, it's similar. But what else are you really seeing here that just encompasses it all? It's just, okay, well, this block is up and it's breaking out. So it's all of these names that are doing it all at once. And I think that that's really very important to point out. Now, I want to talk about this for a second because this is exactly what you would refer to as bearish sentiment. SMCI gets added to the NDX 100 and it falls apart. And so I did a trade in this today. I did a couple trades in this today. And I was long and I actually did quite well with the trading. But there's a couple things here that are really bothering me. And I just pointed one out that you saw. And this is a really good, in my opinion, really good lesson for people to get. And if there's an interest, I'll walk through this one step by step on how you can tell whether or not you should do it or not. But because there's a methodology to it. But if you look at these gap fills and you're paying attention to these gap fills, when people take, especially if you're newer trading, please listen to me and please listen to this a couple times. You'll take a course. The course will be, I don't know how much money, or someone will tell you in some place to use the close below here as your stop. Okay. Don't do that. These are not places for your stop. Everybody knows that you're placing your stop there. Okay? These are actually places of entry. They're not places to place your stop. People that are teaching you or you're learning through a course or whatever to put your stop here, just be really careful of that. There's ways to do it, and it's certainly not this. So what they do is they come in and they gap fill. The algorithms will take you all the way down as far as they can push it, okay? And they will just take all the supply there and they will grab it. And then they will just rip it right back up. So what I tend to do in these situations, especially if it's news driven, is look for the gap fill, and then into these liquidity grabs, I follow what the hedge funds are doing and the algorithms are doing, and I grab. And now when I was grabbing in here, I was able to pull out, I think $10 or $15 in a couple of minutes. Here, watch the trade.
So seems a widowmaker, huh? So everyone puts their stops there. Well, some CI. No idea was just think that they have all these stops there and then just kept coursing the stops down, flushing people out, right? And now maybe they'll rip it back up a little bit. Go crazy. I don't know fast enough. We got 10 on that? No, not yet. Give me a big push or a little more. Here it goes. Boom, right into that trim. So line here. So we don't want to hear panicking because they're like, oh, I'm going to do the gap fill. And then that's my stop, the gap fill. So we get positive slippage on the buy here, right? We just wait for like some kind of semblance that it's going to hold and we buy there. And then we're watching it and then it flips. You get the confirm bar, you get the next one, and into that push, we sold. So I'm in at like 906 here and I just sold at 917 in like 2 minutes. So there's no reason for me to hold that. I made $10 in 2 minutes, 3 minutes. All I'm doing is playing that the fact that all the algos are there pushing this thing down to get everybody stopped. And then I think that it's going to at least retest that level, and it did. So allowed me to pull another $10 out of the name and just hold what I had. You could easily retest that and break it. That can easily happen. It's just a really quick trade to do. Well, good. Still got a little bit of that left, and then I just wouldn't go past that low now and the rest of it. Again, don't be retail. Like, this is what retail's doing. They're all putting their stops there. I watch guys cheat this crap all day long. Excuse my language, but put your stop right here where the gap fill is, like below like $1. Oh, okay. Like, you don't think that every institution knows this is where you want to buy when it breaks. You want to buy someone's misery. I hate to stay out like that, but that's what you want to do. They buy yours. And that's why you pulled that out when I did, right? Because now I still have that position and I can just do whatever I want with that.
Now, if you found that helpful, let me know. I'll walk through how you can identify these step by step. But take a look at this today. For the rest of the day, you didn't have to worry about it until when? 11:30. And we all know what happened at 11:30 today. I'm not even going to bore everybody with the bond auction that happened at 11:30 today, because you've been watching these videos now for months, and you know that when the bond auction goes off that you need to watch it, because you know that that's when we see the greatest effect in the market. And it's no different than what we saw today if we really took a look at it, right? And you can see that that's marked off right there. So if we just drop something as simplistic in as the SPY and the dollar, you might get a sense of what's going on in the market. You could even drop the Qs in there in IWM now and get a real sense of what happened from that bond auction. And what happened? Well, the S&P dropped, the dollar went higher. We know why the dollar is going to buck the normal trend now. We went over that. So we have the NASDAQ dropping, we have the S&P dropping, and we have basically that area which was the high on IWM. So it's still affecting the Russell, just not in the same way. Now, I cannot stress this enough before we go to the next topic. Watch the bond auctions. I know I'm talking fast and I know that this is unedited, but we're going to have to deal with it because there's so much to go through. And I got to get through it all so that you're prepped for tomorrow, at least know what the heck's going on. Here's my concern that I see out there that is a concern. There are 3 pieces of information that we got today that I think are pertinent. Number 1, Apple, iPhone, killing it in India. Stock closes down, meaning from the buy down, we're down in the day. Now, should I care because it's an all-time high? I kind of do, because it means I didn't have follow through. All right. It did hit the tape later today that NVIDIA's order book is actually getting stronger. And now you have Taiwan Semi and ASML comes out tomorrow night. And what do we have here? We have a 3-bar bearish flag sitting right here, and look at where we're sitting. I think this is really important. You're at a 12 and a 22 and you're sitting there. Now you are holding it, but this does not make me feel warm and fuzzy. And I would prefer to feel warm and fuzzy about NVIDIA, and I really don't. So this is a concern of mine. And you're not able to lift, but you're not able to break. So is it retail sales and ASML and we're just staying out of the way? And so we're going to have to watch that tomorrow for sure and watch how ASML. But that doesn't look like anyone feels warm and fuzzy about this company either going into earnings. Maybe expectations are too high. The other thing that I think is fascinating here is that Meta is coming out and lifting all restrictions now after the event of the assassination attempt on Trump. And they're lifting all these restrictions. You can take from that what you want. What I was really surprised about is that the stock had very muted effect. And then we saw these other really muted effects today, where you saw buyers in Netflix and then they faded. We had buyers in Google and then they faded. Amazon, and we're talking about the big dogs here. We had buyers because remember, Bezos is going to be done and then we're all going to buy Amazon and it's going to work. I thought that too. Guess what? They're selling the XLY names. So you start connecting these dots and looking at this, and it still seems like we have that weight. So we're going to have to see how that weight clears up. That's it.